Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at the very popular AI cryptocurrency. It's the Fetch.ai coin FET. FET could have formed a nice 1-2 setup, a bullish structure, a bullish pattern from the April lows. We want to take a look at that today. Let's go. So yeah, we are on our website, dailymarketupdate.com. What you can see here on the website are the different sectors, cryptocurrencies, US Titans, our stocks, tech stocks, and so on that we are covering. If you are interested in getting all of these updates, make sure that you register on the website. You can do that completely for free. And then, as I said, you get access to all of these updates, including also the S&P 500. What we want to do today, we click on the cryptocurrency section. And by the way, if you're interested in additional updates, also check out our new Instagram channel, The Market Intel. The link is in the description for further updates and news. Now let us take a look at the FET chart, Fetch.ai. I want to share with you here the weekly time frame first. And on our weekly chart, I think you can clearly see that we're currently in a larger degree accumulation area. So these blue boxes with the green borders around them, these are typically long-term accumulation areas, and we do normally not expect the price to reach these zones again in the foreseeable future. So now we are in this zone, but once the price leaves this area and then rallies, as you can see on the chart, probably a $10 FET would not be unrealistic if really this pattern that we're tracking here is being followed. Now, I think looking at it, at the moment we track this as a wave 2. The wave 2 might have bottomed earlier this year. I think in April it was. So a third wave rally to the upside should first of all take us above $2.19, then $3.48. And overall, if the bullish structure is really being followed, we should see it get to probably $6 to $7 in this third wave. Then there could be a substantial fourth wave correction, which could actually be quite substantial, considering that this fourth wave, it does really look bullish, right? And it is long term as long as these relevant levels are holding, especially the 5.6 cent level. But please consider that this wave 2 took more than a year. Yeah, this wave 2 from the March 2024 high, where the price topped at $3.48, all the way down into the April low. If the low is really in, it took more than a year. So if we then get a nice third wave rally, it should really start from the current price region. Not really any evidence for it right now, and there are definitely no certainties, but that's what should happen if this wave structure is really being followed. And we want to see the price break above $2.19, $3.48. But if we form a price top here and form that fourth wave, it could be quite a large and substantial correction, which could take some time to develop. It might take some time to develop, also maybe a year. Sometimes the wave 2 and the wave 4 have a very, very similar duration. So it might not be a very sharp correction, but please note that even in a wave 4, which is usually more of a sideways correction, more like a consolidation on a high level, there would still be some decent volatility probably. So that is just something to keep in mind. And if really an impulse plays out and we get maybe to $5, $6, $7 in this third wave, the fourth wave should then hold above $3.48, because the wave 1 and the fourth wave, they must never overlap. Definitely something to consider. Now let us also take a look at the 4-hour time frame. Here on the 4-hour chart, we can see that the price is on its way higher. And as I said, there is a chance that this wave 2, this larger correction that started 2024, actually bottomed in April. And if that wave 2 indeed bottomed in April, this larger correction, then we can assume that we're now in the next move up. That would be the larger degree wave 3 I just showed you, which however would also be a 5-wave pattern itself. So it would be magenta 1, magenta 2, magenta 3, magenta 4, magenta 5. And what you see here might just be the beginning of magenta wave 1. So we possibly completed wave 1 of 1 at around 99 cents, around about $1, psychological mark. Wave 2 pullback might have bottomed on the 22nd of June. That was a day when a lot of cryptocurrencies might have bottomed. Important now to keep this upside scenario alive is that the market holds above 55 cents. That would be next support. Below that level, and we only see that broken with a probability of 30% in our alternative scenario, but below that level we might attack 35 cents, the swing low from April. But that is then the invalidation point for this blue 1-2 setup. Yeah. So if we see further upside from here, next objective for the bulls would be a break above 99 cents, and then we could start to move up in a third wave. That would be a third wave of the wave 1. Typically quite aggressive, such a third wave, so we might only be in the very, very early stages of it. Something that looks a bit similar to what happened here after the April low. Definitely an interesting time to be watching the markets, and definitely a bullish structure as long as we're holding above 55 cents. There's always going to be a level where structures invalidate. Keep that in mind. That's the update about FET or Fetch.ai. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure to check out our website, link in the description, and also the new Instagram channel, and let me know in the comments which other cryptocurrencies or tech stocks or stocks you want me to cover in future videos. Thanks so much. Bye-bye.